minute while I connect to Facebook. We'll be getting started momentarily. And I think we should be live now on Facebook. Hi everybody. Welcome to the Strategic Swing Trader. I am Sami Abu Saad, Director of Education at T3 Live. I hope you're doing well. I hope your weekend is going great. We're gonna go over the market and then we'll go over some swing ideas for next week. But before we start, as always, standard required disclaimer to let you know that trading is risky and that whatever we discuss is for educational purposes only. If you'd like to download a copy of my free ebook, link for that is in the description. Actually, also in the description of the video below, you'll find a link to our sale, which ends tonight. It's our B.O.G.O sale, buy one, get one free. So you buy 1 month, you get 1 month for free. You can use it to subscribe to my newsletter, to the Strategic Day Trader Room, I think any service that T3 offers. It ends today, so you might want to take advantage of it quickly. So with that said, let's turn to the charts and take a look at what's happening in the market. And then we'll also, as I said, take a look at the swing ideas for next week. Last week, we talked about, this is how before when I did the video last weekend, this is how the market looked. That's the chart of the Qs. We had just triggered the weekly sell setup. As you can see, we had just broken that under that prior bar's low. And I said, I really hope we come in a little bit to the rising 20. That's the blue line on the daily chart. And then go back up. And if the buy setup fails, then all out bearish. Okay. Unfortunately, well, fortunately or unfortunately, it doesn't really matter that much. We got the buy setup right away. So that's Monday of last week. We had the pop. And then Tuesday, we had the drop. I killed 1,000 shares of the TQQ in my swing account. I got out of it at the exact top. And then on Tuesday, I got out of my IRA account. So I don't have the TQQ anymore. You know, when I saw that big red bar, I knew that buy setup was going to fail. It failed. Oh, we gapped down the next day. So it totally failed now, this buy setup. And we have a weekly sell setup in the Qs. The Qs definitely look slower. But notice the 20 MA still pointing up. Usually you don't get much of a drop without until the 20 MA flattens out and starts to point down. Okay, so even though the Nasdaq is very weak, looks lower, we still have that rising 20 on the daily chart. That's why I had hoped we would get the pullback to the 20 and then the buy setup, the pop, and then the drop below it. But we got it over here. So it's not as easy right now, but the Nasdaq looks lower. If we look at the SPY, the S&P 500 looks higher. We have an all-out rising 20. We're not breaking below it like the Qs is. The 20 on the hourly is actually, if anything, is pointing up a little bit. So we need to get alignment between the two, okay, before we can expect to get follow-through in either direction. Of course, what happened last week was very bearish, and I don't think the weekly sell setup is gonna fail. If the weekly sell setup, this is a rally to the declining 20, that's called the weekly sell setup. Okay, if this fails, if we actually end up taking out, reversing that red bar, I would be 1,000% bullish again. I was bullish earlier, now I'm not. But if we fail on this sell setup, we break above it, we get a green bar next week, the following week, I'll be 1,000% bullish on the market again. But I don't think that's going to be likely. The same actually with Bitcoin, which is actually moving up. I see it because it's right here on my charts in the back right there. So with Bitcoin also, we had the move, we have a monthly buy setup. So here's the monthly chart. But just like the equities market, we have a sell setup and the sell setup triggered. If we fail on it, we go back up, then I'll be 100% bullish. Is it likely? I don't think so. I think it's more likely that we would continue lower. I'm out of Bitcoin and Ether, by the way. Last week I got out. So so that's the issue right now, is I'm waiting to see which way the market goes. Lower, which is I think more likely right now, or do we fail on this weekly sell setup? So only time will tell. Now, an idea would be, if you're bearish on the market, if you think for sure we're lower, since the Qs is much weaker than the SPY, one idea would be to short the Qs and buy the SPY and pocket the difference, because I'm fairly certain that the Nasdaq will drop a lot more than the SPY, because the Nasdaq is dominated by all these technology stocks. In addition to the FANG stocks, we have all these growth stocks that don't make much money. In a recession, those are the stocks that get killed. So if you're bearish, all out bearish on the market already, the SPY will drop, the Qs will drop, but as a, if you're not 100% sure and you just want to pocket the difference, one can do, or if you want to hedge your short, one can short the Qs and buy the SPY and pocket the difference, because I'm fairly certain that the Qs will drop more than the SPY. Okay, and if they were to go up, then at least you have the same amount in the SPY long as you would have in the Qs short. But this scenario would be of interest to me only once I'm all out bearish on the market. I'm not quite there yet, because as I said, we need the 20 MA to flatten out, start pointing down. We need the SPY to weaken a little bit. So if that were to happen, then I would be open to shorting the Qs and buying the SPY and just pocketing the difference after a drop. But that's a little too early for me. I'll talk about it maybe in the future again once I'm ready to execute that trade. In terms of will we get a recession? Will we not? Probably, likely, based on the fundamentals, based on the fact that going back to 1850 through till now, we've had 33 recessions. So if you take 168 years divided by 33, the average bull run is 5 years, 5 years and 1 month. And we've had 15 years now, since 2007 or so. We've had almost 14 years of a bull run without a recession. So the average over the last 168 years has been, we had 33 recessions. So the average has been every 5 years we get a recession. Now we're almost 15 years without a recession, and this time around the Fed is probably not going to be able to help much, because they actually want the market to drop to some extent. It's not that they want the market to drop, they just want to control inflation. And the fact that unemployment is so low, that's going to keep demand high, which is going to keep inflation from dropping. So again, I think it's pretty likely that we will end up having a recession eventually. I don't know when exactly. Probably going to take time. But as you know, the market discounts the future quickly, and it will get reflected in the price of the market before you see it on the ground, before economists start saying, oh yeah, definitely we have a recession, we have declining GDP, we have this whatever unemployment. So before all of that happens, the market will reflect that in the price, and it'll be able to benefit from it. But it's probably likely this time around, because as I said, 15 years or so without a recession, and the Fed is not going to probably step in and add liquidity, because that would be counterproductive to their strategy of controlling, their goal of controlling inflation. So probably likely, it's going to be very, very interesting the next 2 years or so. It's going to be super interesting. I can't wait to see how it all plays out. If the market goes back up and fails on the sell setup, that would be the ultimate bullishness, but I think it's unlikely. And if we don't go back up and we start to weaken more and more, then I think it would be more and more likely that we will end up having a recession. Not only just a pullback in the market, but eventually a recession in the economy. So we'll see. It's, as I said, it's super interesting right now to be a trader, and I almost can hardly wait to see how it all plays out. Okay, and I hope you feel the same. Now, let's talk about the swing ideas for next week. And I want to tell you about the most surprising thing that happened last week. As the market dropped, I had about 30 long positions. I don't know exactly how many long positions, and I think only 2 or 3 shorts. Okay, now I have a few more shorts, but I thought I'm gonna get hurt. Now, a lot of these longs I gathered on the way up. They triggered, and I just kept them. And I thought on the way down here, I'm gonna get hurt a little bit. I'm gonna give back a bunch of money. The opposite happened. I made more money on the long plays as the market dropped than I did while the market was going up. It was freaking weird. Okay, but it's not really so weird if you consider what we have in the portfolio. We have all these. We have ABC, CAH. I still have. It actually officially reached target on Friday, but I still kept it. So we have medical, pharmaceutical stuff. We have DTE, which is utility. I have Humana, which is another Humana, right? Medical insurance. KHC, defensive, it's done well. The last 3 days went up. PFE, but we've had it from here. Okay, as the market dropped the last few days, it shot up like crazy, and I was already regretting not trailing it to here. I was like, I wish I had trailed half on PFE. Now it shot up. TMUS, right? T-Mobile, so, and much more. CRK, but I got skipped on my entry on this one. This would be actually the best. It's oil, but I got skipped. And I have a few shorts now. VLON, I have short that's doing really well. Path, it just triggered, I think Friday or Thursday, so it's just starting. SDIG, so I have a few shorts now, more than I did before the drop in the market. But even the longs did better as the market dropped than while the market was going up. So I was really surprised. So if you're in the newsletter and you still have those open positions that I haven't trailed, then kudos to you, because right now they're doing even better. Okay, and if you're a subscriber, I already picked out the plays for tomorrow. Feel free to log on to your account and you can take a peek. Okay, all right, sorry about the long start there to the video. Let me show you what I like for tomorrow. Okay, ABT, another healthcare stock, Abbott Labs. So I like it higher over the base, stop under that doji bar. It actually has a pretty nice monthly buy setup. See it? Has a decent buy setup. The weekly is not very good. You got the overhead declining 20 or flattish 20. This is the kind of moving average that I told you we need to get before the market really starts to tank. We need to start to see a flattening of the 20 MA and then pointing down. Okay, so I like the Abbott as a long play. It's one of a bunch that I like. ASRT, pharmaceutical, I believe. I've been eyeing the ASRT for quite some time because of that monthly transition A. So I really, really like it on the monthly, but I haven't been able to figure out a way in it. Now I think it's okay to do up here over 250, stop under 296. So it's about a 55-cent stop. Okay, and target 575, which is the prior resistance on the weekly chart, I believe. CHK is oil. As I said in last week's video, I made a couple mistakes on it. Should have done it on the earnings day that day. Should have done it maybe on the pullback. I didn't. It's been basing for a while, so I like it. Higher over the base. Stop down here. Okay, it's a big stop, but over the highest high, $93, I think. Stop would be, I would say, under 86.70 on the CHK oil. CHKP is actually software, checkpoint software. So long over that bar's high, stop under it, 145.60 by 141.66. It's at all-time high. I mean, that's all-time high. So no predetermined target, higher long term. DCPH, pharmaceutical, is a base breakout. And as I said, pharmaceutical, medical has been doing well, more than pharmaceutical. So I guess pharmaceutical, yeah, medical, pharmaceutical have been doing well. So this would be pharmaceutical. Long over the base, which is 1040, stop under it, which is 958. and target, lots of room to go. Okay, so DCPH, DOGZ is Chinese, but it's holding up pretty well compared to the Chinese stocks. Over the base long, stop under it. Okay, and then target up here at like almost $9. Has a lot of room, but it needs to break above the base first. Okay, what if tomorrow the stock just drops? Then no play, no harm, no foul. So I would only do it, only like it, if it actually takes out the top of the base. Okay. EXTN, like it, I've also been eyeing the EXTN, just like the ASRT. It's got a transition A on the monthly chart, so I really like it. It triggered on Friday. I wasn't watching it on Friday because I didn't think it was gonna go, so it wasn't on my watch list. It popped on Friday, but it's not too late. The proper entry, the right entry, should have been over 680. So it's about 20 cents late. Entry over $7. Stop can be as tight as 637, just under this little shelf. Or safer, wider stop would be under 614. Okay, as a long-term play. It's oil, I believe. Oil. The HSIC healthcare looks good, but I have a bunch. Okay, that's the only issue. I have CNC, which I didn't even talk about. I have CNC, Humana, ABC, CAH. Those are all healthcare. So HSIC healthcare also breaking out, looks good. It's the only thing that doesn't look good about it is the fact that it's at the all-time high, basically at the resistance. But who's to say it won't break above it? I think it will. Okay, I think it will. It just needs to pop tomorrow, and then I think it'll end up breaking above the prior highs on the monthly chart. JBHT collapsed a little bit. A couple weeks ago, I was like, JBHT, that's a trucking company. Oil prices, gas and diesel price was going through the roof. I was like, how is that not dropping? I just couldn't believe it because it's at all-time high, and then it collapsed. But if you look at the hourly chart, it has that transition A breakout. So I don't dislike it. Just over the base, stop under it. Okay, not bad. It's not one of the ones that I picked for my own account and for the newsletter for tomorrow, but it looks decent. NXC is a 1, 2, 3 breakout. So broke out already on Thursday, narrow range bar on Friday. Tomorrow, if it takes out 627, let's say 630, if it pops above the high of these two bars, then long above, stop under $6. Okay, it's I think so. It's energy. It's like minerals and metals. I don't know exactly what they do, but I like it. And then Pfizer, we talked about it. I'm not gonna add to the position. The initial position was entered into over here as a weekly buy setup, and now it has a 1, 2, 3 long stop, and then target probably the prior high, $60. So again, it's on the list, but I'm not adding. And then AT&T got me, I believe, twice. Oh, well, first time it made some money in the swing account, lost money in the IRA account, and then recently over here played it, and then I took a stop the very next day. It still looks higher over the base, which is 24, I think. Yeah, 24, long, stop under 23.39. Target, $27. 25.50 for target 1, the 200 MA, that red line. And then 27 or so for target 2. As I said, the TMUS is an open position in the newsletter. Over on this buy setup was played and added to on the breakout right here. So, but and as you can see, it's done pretty amazing. Right here long and right here long. 2 entries, 2 plays. So it's doing well, but it's probably going to pull back a little bit. I'm going to trail half if it comes in and breaks under the SPARS low tomorrow. So AT&T would be another telecom stock. Now, why telecom? Why is telecom doing well? Why is pharmaceutical, medical distribution stocks? Why are utilities doing well? Because these are considered defensive stocks. In a recession, you still need electricity, obviously. You still need medical supplies. People still need to use their phones. And so that's why those are doing well, okay? And not that I really went out of my way to pick those plays, but that's what was showing up as bullish the last few weeks. And so kind of coincidentally, I got in them because they were just looking bullish. And now, some of them I didn't get in, like ABBV, which is killing me. I was in it sometime last year and then I got out. Should have played it on the breakout. VRTX. You know, there were a few that I knew better, but I didn't get. But like I said, ABC is an open play, CAH, open play, I don't know what else. A couple more healthcare stocks, Pfizer, CNC, Humana. So I did get a bunch, but not ABBV, not VRTX, which have done extremely well. All right, on to the bearish list. It's pretty long, but it's also not bad either. AGTC looks lower. AGTC is already an open position in the newsletter as a short over here. Stop right there. But one can add to it under the base still. Okay, I know it's a $1 stock, but it actually looks lower still. It could, if it drops to 50 cents, you would be up 50%. Okay, so just so you know, it's all about percentages. So it looks good. AGTC, not about dollar amounts. If 50 cents on a stock like Apple wouldn't matter. On a stock like AGTC would be 50% of the stock's value. So it really makes a huge difference here. CFLT, not very good on the daily because we got that 20 MA pointing up. And remember what I said, before you get a really big drop, usually the 20 needs to go flat a little bit like here and then start to point down. But I really like the weekly chart on this one, weekly sell setup. So I like it under this bar's low, stop above the pivot right here, target the prior low, and then maybe a lot lower if the market gets going to the downside. Okay, so this is bad daily, decent weekly. I like it long-term lower. CGNT basing at the lows, short under the base, stop above it. If you look at the hourly chart, you'll probably see that it looks pretty decent under the base, stop above. Okay. One of the best shorts that I got right now is, I don't want to jinx it, is VON, which is a $1. Oh no, not VON. VLON, which is a $1 stock. And I was gonna say, you know, it was the same idea as the CGNT. It gapped down, based a little bit, and then under the base short, stop above it. And as you can see, every day, you know, again, knock on wood. I don't like to jinx my own plays, but it drops every day 4 or 5%. So the CGNT similar. CRIS, I actually got in it and got shake and I killed it because it popped. So got in it this day, killed it the next day. It still looks lower under the base, stop above. I wish it wasn't a $1 stock. Normally I don't like to short $1 stocks, or as some people call them, penny stocks. I don't. I like to short higher price stocks. But that's what I'm finding right now. I'm scanning for bullish and bearish. A lot of the bearish stuff is very low priced. So under the base, stop above it. Another one looks definitely lower. Only issue with it is if you consider this to be the target, which support is usually when you're shorting, that's target. Resistance is target on the way if you're playing long. So that's only $2. So that means it only has 60 cents. If you say, well, no, that would be target 1, and then the 200 MA about 150, target 2, then I would say, okay, that's better R to R, okay, on the CYRN. Otherwise, like it a lot. HASI, better slow down. HASI is a 1, 2, 3 to the downside. So short under 41.60, stop over 43.75. Target, tricky because you have support right here, but I think it'll go through it if the market is bearish. And then the real target is about 35 bucks, okay? Around 35. INFA is like the CFLT. Slightly rising 20 on the daily, so it's not quite ready, but check out that weekly. Oh, a nice weekly sell setup. On the INFA, LYFT is flat 20 a little bit, so I'm passing on it, but looks really weak. On the LYFT, base breakdown on the daily chart. I'm just zooming out to show you the base on the daily. Looks lower all the way down to 25 or so, okay? On the LYFT, PACB is basing like it's short under 827, stop above 927. I have also the PLBY short, PLBY. I don't know if that's still what it is called. Looks like it. So PACB looks almost identical. So you see that's PLBY short. I know it's your favorite website or whatever, but the chart looks lower, so I have it short. Now, PACB, I'm about to click on PACB. Almost identical. Like it. Not bad. Under 827 stop, above 927. $1 stop. And I think it has better room, more room to the downside than PLBY does. Meaning it has room all the way down to the start of that move up, which is, I mean, if you look at it, $4 or so. So it has a lot of room to go. If we look at PLBY, I feel like I made a mistake shorting it. It's actually in the money, so you know it's making money, but doesn't have a lot of room. $10, 11. I mean that's $10. I think the low here. Yeah, $10. That's like the most. So between the two, I like the PACB more for sure. Okay, we talked about PLBY. I didn't even know it was on the list. I forgot that I had it on the list. But anyways, that's lower too. SDIG is already an open position, but I really need to see it break the base here. If it pops, I'm gonna trail it or trail half. Okay, but if it breaks under the base, one can look to add to it because it has now a base breakdown. If it breaks under the base, and then YETI is looking lower too. Nice base breakdown on the daily chart. I always like it when the 20 is more like so, 45 degree rather than 33 degree or not even 33 degree. That's more like 25 degree. So it would have been better if the 20 was pointing down more. Then you have more momentum to the downside, but I like it lower. It's the base breakdown. Maybe gets down to, that's 48, I believe. I thought it was 50, let's just say. That's 50, 51, and then 44 at the lows there, 43. I thought it was, so yeah, that's 48, 47, 60, and then 43 would be target 2 on the YETI. So I picked a few shorts and a couple of longs for tomorrow. If you're a subscriber, again, the email will hit your inbox by about 8 a.m. in the morning, giving you an hour and a half to input any orders you want. Or if you want to take a peek at it, take a look at it tonight and input all the orders you want, then it's already completed. Just log on to your T3 Live account. All right, everybody. As I said, we have that B.O.G.O sale. Buy one, get one free. So you can check it out. Today is the last day. Link for it is in the description. So you buy 1 month, you get the second month free. Okay? Check it out in the description. If you have any questions, reach out to our customer service department, info@t3live.com. info@t3live.com. Thank you so much for sticking around till the end. I am Sami Abusad. I hope you have a great week, trading week next week. Take care, and we'll talk again soon.